Good morning, everybody. Welcome to today's Hump Day edition of the Premarket Prep session, March 20th, 2024. It's a Fed day. It's a Powell day. We might have some fireworks in store this afternoon. And of course, in order to keep you ready, to take that on and to take advantage of the opportunity that it will present, we're here for the Premarket Prep session. This is where we go over the important news, notes, trade ideas, pretty much everything is going to be key to keeping you in the right mindset, as well as aware of the opportunities that are necessary to execute in order to build your account over time, right? Make sure that your money is working hard for you, and ultimately traverse this crazy world where each and every day there is something new that is going on, right? Some new development that is happening. And I think there was a clip by Mark Cuban that said it best when he said that, the technology that comes in the next 5 years is going to, even in the next 2 to 3, is going to absolutely dwarf what has come in the previous. So it's just very important to make sure that we're on top of what's happening, right? We're making sure that we're using that, leveraging it to our own good, making sure that we are providing extreme amounts of value within whatever capacity we function as, right? If you work as a checkout clerk or a sales clerk or whatever, right? It's your time to figure out how to take what tools are available now and provide even more value in whatever capacity you do. There are tools that are available to help every person, regardless of your job. There are AI tools now available that can help you do that job better, reach more people, reach more customers, be more organized, be more efficient, like literally in every single sector. So you want to be out there researching that, figuring that out, and integrating that into what you do, right? And making sure that you provide a lot of value within the marketplace. You do that and you make sure your money is working for you. That is the recipe for success in 2024 and beyond, right? That is the overarching recipe. But pushing both of those, right, is very important. Working toward both of those in some capacity each and every day is really important. We have a lot more time in the day than we think, a lot more time in the week. And this is one of those times too where, to be honest, in history, you got to just say screw the weekend, right? If you're not where you want to be and not where you need to be in terms of integrating those things, then that is the time, right, where you invest in yourself and you put in that extra hour, right? Wake up when you would for work on Saturday, but put in some work in the morning, right? Earn that Saturday. Same thing on Sunday, right? Earn that Sunday. And don't look at the weekend as days off that you can't do anything. Because a lot of people say I don't have time, right? But what you really don't do is make the time. So make the time to ensure that regardless of what announcement happens between now and the end of the week when NVIDIA's conference is over, right? Regardless of what happens over the course of the next year when all of these big techs have come out with new AIs that can do X, Y, Z, right? You're still in a position where you have created value in whatever ecosystem you exist in. And you've made yourself indispensable. That is the name of the game. And I keep pushing that so that, I could say, hey, for anyone that would listen, right, this has been something that has been heavy on my heart. So I'm going to continue to drive that home. But no matter what you do, right, this is something that can help. Just starts with a Google search or a ChatGPT search and then roll from there. But let's dive into what we got going on today. As always, we're here to do what? Get 1% better each and every day. That's what we're looking to do. So throw that 1 in the chat signifying your intention to do that. If you do it by accident, it doesn't really count. You can't replicate an accident, right? You want to be able to have a system set up so that you can replicate and get good results, right? Over and over and over again. And the key to that is the little things like being here for the session. So in terms of top news here, rate expectations, the Federal Reserve is taking center stage today. And with inflation proving stickier than expected, the central bank finds itself balancing between a hawkish and dovish view. While the policy setting FOMC is widely expected to hold at the 5.25 to 5.5% range for a fifth meeting, the bigger item to watch will be the so-called dot plot. Policymakers will update their rate and economic projections for the first time since December, potentially deviating from the 3 rate cuts they previously penciled in by the end of 2024. Now, in terms of a snapshot, a months long standoff between the markets and the Fed is drawn to a close as a slew of economic data in recent weeks has reinforced the monetary authority's case for caution. In January, Fed funds futures traders had priced in 6 to 7 quarter point rate cuts by the end of the year. Now, with inflation falling slower than expected, traders see 3 reductions starting in June or July, aligning with the Fed's December summary of economic projections. Earlier this month, Fed Chair Jerome Powell emphasized in congressional testimony that the central bank's inflation battle has made good progress toward its 2% goal, though quote, just a bit more evidence is needed before implementing the first rate cut. So we're right at that finish line where if we had gotten the data that we needed over the course of the past, a few data drops, we probably could be cutting by this specific meeting, but that wasn't the case, right? So now we're looking at maybe cutting in June or something like that. Do I think it goes back further than June? I don't think anything can hold out for it to go back further than June. I think that if we do end up having to push rates back and not decrease them within the next 2 months, that exponentially increases the odds of us having a recession. And that's just where we're at. Like things are stuck between a rock and a hard place. And at this point, if there is no rate cut soon, they're like something's got to give. Something's got to give, and we won't be able to maintain this. And I don't think that happens given the fact that it's an election year, right? I mean, it could happen, but Biden's going to do everything in his power, right? He's going to muster up all 125 years of his life thus far and put it into an effort of getting those rates lower. So we are getting into dicier territory. I know everybody's always like, oh, we were supposed to have a recession. We did this, we did that. We did have one. Right? We did have one. We had negative consecutive quarters of GDP. It is extra expensive for everyone to live continuously. We have more debt than ever. We have more, defaults than ever. We have more issues with auto loan repayment than ever. So it's a lot that is happening, right? And you might say, oh, well, this doesn't feel exactly like that, but for a lot of people, it does. So it wouldn't be a far jump, right, for us to fall into a recession when you already have inflation high and everyone is already putting a ton on credit, et cetera, et cetera. So right, this is the exciting stuff. I'm glad I'm not in politics, so I don't have to deal with this or in monetary policy. But it's definitely one of those things where it'll be important what Powell has to say today, and I'll be interested to see if he takes a stance or if he remains agnostic, right? If he still says, hey, we at the data. I'm not really flustered by the data that we've gotten, and then we'll see about hiking, right? But if he says like, oh, this data has not, drastically affected our plan, we still think based off of X, Y, Z that, we're on the right track, then that would be extremely bullish. And if he says that, yeah, based off of the data that we got, the data that we've been getting, we've had to adjust our plan, and, we definitely will push back the cuts, maybe not even cut this year. If he goes super hawkish and says stuff like that, then, likely have negative repercussions for the market. But there's again, no reason to try and guess what he will say, because there's 1,000 different ways that the market can react. You just want to make sure that you are in a position to react once the market reacts, right? And take advantage of the opportunity that's provided by his words, whatever they may be. So let's see here. Okay. And by the way, again, that press conference from Powell, 2:30 p.m. Eastern Standard Time. So the FOMC interest rate decision is at 2 p.m. Powell's at 2:30 p.m. Reporters, so make sure you set an alert, right, on your favorite voice assistant because it'll sneak up on you. Reporters may ask how the combination of this year's sticky inflation prints and weaker retail sales data affects his thinking, while taking into account the central bank's dual mandate of stable prices and full employment. In terms of risk of acting too late, should the Fed make a hawkish shift, markets will take that as a higher for longer stance, which could be interpreted as, quote, higher until recession, which is exactly what, I was just talking about. It's pretty much where like they're just going to hold out until a recession occurs, because this inflation is just too stubborn. according to Seeking Alpha analyst Demir Tokic. Logan Kane also sees risk of a recession, citing state-level economic data from the Philly Fed and other figures from high-income countries that show their business cycles are ahead of the U.S. and suggest that the global economy is cooling. For another take on the rate dilemma, check out Fed Must Risk a Small Recession Now by investing group leader James Kosteritz. A nice little plug, I guess, there at the end. In terms of consumer news, cutting the burrito. That sounds good right about now. I think I might need to get myself some Chipotle for lunch. What do you do when your company's stock price is worth thousands of dollars? You implement a 50-for-1 stock split. The news, which sent shares of Chipotle, ticker CMG, up 6% in pre-market trade, will be subject to shareholder approval at its annual meeting on June 6th. If approved, the company's shares are expected to begin trading on a post-split basis on June 26th. Chipotle also announced a special one-time equity grant for all restaurant general managers as well as crew members with more than 20 years of service. So that's awesome. The reason why this is impactful, again, it does not make Chipotle any more valuable, right? For you to cut 12 slices into 36 slices does not mean that there's any more pizza there. It just means that it's more accessible, right? Right now, Chipotle, the stock is very expensive, right? Thousands of dollars per share. And their options are also super expensive. So what this does is it makes it easier for options to be traded on CMG and for CMG, to be bought by people. You don't want to go in and say, oh, nice, the stock is, $3,000 a pop. I'm going to buy 1/30th of it, right? And then keep stacking up. Like that doesn't encourage investment. But this does, right? If someone can say, oh, I can go get a few shares of Chipotle, right? For a few $100 or maybe even less. That's encouraging, right? That's encouraging. So on the options front, this is significant for that reason because stock splits make, these contracts more affordable to trade. Very expensive stock means expensive option contracts. In terms of tech news, Silicon Rush, the U.S. government is awarding Intel about $20 billion in grants and potential loans, which includes up to $8.5 billion in direct funding through the CHIPS and Science Act. All that money will advance Intel's commercial semiconductor projects across Arizona, Ohio, New Mexico, and Oregon. Quote, it's a huge deal, Secretary of Commerce Gina Raimondo declared. Quote, it means bleeding edge semiconductors made in the USA, keeping the USA in the driver's seat of innovation. It also follows Intel's plans to invest over $100 billion in America over 5 years to boost domestic chip making capabilities critical to emerging technologies like AI. Now, in terms of, that's good for Intel, right? Good news for Intel, especially as I believe that they had lost some rather large contract as of recent. So Intel getting a nice little pop here, a pre-market because of that. Nothing crazy, but we'll see if we can get it together. Intel has been ranging and pretty much sideways for a very long time. Definitely not on the same vertical trip as the rest of these, in the semiconductor space, the rest of these tickers. So, we'll see what Intel ends up doing and if they can catch up, right? If throwing money in this furnace can help them catch up. In terms of outlook, going private, new ownership in the retail space. It sure looks like Hold up. New ownership in the retail space? Question mark. It sure looks like. 2 major department store chains are exploring private options against a backdrop of macro challenges and low foot traffic. Nordstrom, whose ticker is JWN, founding family, has been involved in several reports, while Macy's, ticker M, might be going down a similar route. The latter has even opened its books to Ark House and Brigade Capital to allow due diligence that could lead to a raised take-private offer. High inflation is another factor in the decision-making, with budget-conscious consumers shopping at discount retailers such as TJ Maxx, ticker TJX, and Burlington, ticker BURL. And some people are just not shopping at all. And some people are just stealing, right? That's what makes it tough with Dollar Tree. I was surprised here Dollar Tree had to close all those stores, but my only guess is that they must be getting just jacked. And that's what's tough with the discount retailers, right? At some point, it was everybody goes from, mid-level retailers and high-level retailers to discount retailers. But now it's like people go to discount retailers and then people just steal from the discount retailers. Like they're just like, you know what, actually, screw the spending money at all. I'm just going to take it and leave, right? And apparently there are no consequences. So Yeah, it's just tough all in all in the retail space. This is something that isn't shocking to see coming with, Macy's and Nordstrom. They've got to figure that out, right? They've got to figure that out. And if anything, I'd be looking to partner with some of these, social networks or some of these influencers in order to turn those spaces and transform those spaces into something different. If I'm Nordstrom, I'm going and I am checking out micro influencers that live in the area. And I'm making exclusive product partnerships with them, and I'm having them bring their followings for in-person events at Nordstrom, right? It's a huge space. You can have tons of fun things going on there, but personal brands and influencing brands are huge right now, right? Or I'd be putting money into developing my own AI influencer, um, maybe even with the help and consulting of a few current influencers. I'd be looking to do either one of those things if I am in the huge retail space. Because as of right now, you walking into a freaking mall, I mean, those places are just cash burning machines. They're cash burning machines. So they're either gonna get somebody with good ideas that can help them pivot. Nordstrom, if you need help, on the consulting front, hit me up. But I've got a lot better ideas than what they are currently using Nordstrom for now. And as they continue to struggle, you see Mr. Beast just signed that huge contract with Amazon for like basically a big challenge show, and that is the first of it's really a watershed moment in the media space, in the content space, but it's not going to be the last. And Amazon is on the ball with this one. I think that he'll bring them much more money than it cost them to land him, for sure. And kind of a bit of a blow to YouTube. He'll still be on YouTube, but in terms of today's markets in Asia, Japan closed, Hong Kong up 0.1%, China up 0.6%, India up 0.1%. In Europe, London were down 0.1, Paris down 0.6, Frankfurt up 0.2, the Dow down 0.1, S&P down 0.1, Nasdaq up 0.1. That's basically all flat. Crude oil down 1.3%, gold down 0.1, Bitcoin down 0.1% to 63K. Today's economic calendar, we've got FOMC announcement at 2, Powell at 2:30. Make sure you got those, factored into your schedule today, because Fed days, we know, sometimes we open, we push a bit higher, and then we chop into the Fed meeting. Other times we just chop straight up headed into the Fed meeting. And as you guys also know, because I've said it here, typically the first move is the move that you fade when it comes to when Powell is on, right? So if Powell is on, then we start going up. Typically we top out at some significant level, right? Previous level of significance. And then we actually head lower for the real move. Conversely, if we start out going down, typically we find some type of previously established support level, interact with that, and then we reverse and we end up, going up for the move. That doesn't mean that you go and you buy calls and you buy puts and then you cut, whichever ones don't work and you hold the ones that work, because you aren't guaranteed a huge move from FOMC, right? So don't go in there and say, oh, I'm just going to play both sides and do a straddle like you do on earnings, because people get screwed on that too if you don't move enough. And there have been FOMC too much, right? We'll go down, we'll go up, and that's any big move. So it's important to just be knowledgeable and be in an environment and in a community that has the means and the mindset in order to leverage the opportunities that are available, as well as tell you when to sit tight. That's the biggest thing when it comes to trading, right? Any type of trading, betting, like on the sports betting front, like all of them, there's times to hold them and then there's times to fold them, and there's times to decrease risk. There's times to completely sit out. Knowing that is what makes you great, not knowing, oh, this person has the chance to do this. Knowing, oh, that, based off these circumstances, there's likely to be decreased performance all the way around. So there's no reason to be out here moving heavy. That's a lot better than knowing who has the opportunity to go off when overall everyone is more than likely going to have subpar for performance. And the same thing goes for the stock market here. So in terms of what else is happening, we'll finish up with our rapid fire stock news rundown. Unilever, ticker UL, to separate ice cream business, slash 7,500 jobs globally. Put your money to work for you. Learn AI. It's the only thing that, it's like, I'm going to be a broken record, but that's what needs to be played, because thousands of jobs every day right now. And it's not fear mongering. It's true. I'm not saying thousands of jobs will be lost. I'm just talking about the ones that are being lost daily. Dividend watch, JP Morgan Chase, ticker JPM, raises dividend by 10%. Planet Fitness, ticker PLNT, faces boycott over transgender intent. Slowing EV shift, fuel economy ratings scaled back, emissions next. JBLU, which is JetBlue, right? Their ticker is JBLU, reduces flights to focus on bread and butter routes. Everybody's pulling back. Supermicro Computer, ticker SMCI, issues clarification after CEO interview. And then Wong, the CEO of NVIDIA, said NVIDIA will gain larger data center share than other firms. Then Intel-backed Astera Labs, ticker ALAB, ALAB, prices IPO at $36 per share. Boeing, ticker BA, mulls sales of defense assets to bolster balance sheet. And then Saudi Arabia plans to create $40 billion fund to invest in AI technology. So that'll wrap us up this morning, y'all. Put a bow on it and take us out. We've got, a possibly exciting day ahead of us. So let's see what Powell has to say. Let's see what opportunities present themselves and make sure that we're taking advantage of them. With how weird and low volume and choppy the market has been, it's really been a time to position in long swings. And long swings are something that pay really nicely, right? Oil's been on a crazy run. That oil run has been paying. You look at, companies like AppLovin and a number of the other ones that have been called out over the course of the past few months, even the past few weeks, with things like Gap, right? Gap just steadily chugging toward those price targets, paying us in those long swings. We've got long swings in the red, right? They're looking to get right. But overall, don't be afraid to hop in the long swing game as well, because there are going to be times when those are most advantageous in the market. And then there's going to be times when it's going to be, day trading that's going to be most advantageous. But in those times in which something is moving up, but it's kind of like moving up in a way that it's not fun to day trade it, but you know that it'll go up over time, right? That's where those long swings just they shine, and they shine darn beautifully. But I'm gonna wrap it up here, right? Everybody have a great rest of the day. Let's crush it. I'll see you back here tomorrow morning for our next pre-market prep session. Have a good one.